Welcome to another episode of Banking on Air. I'm Helene Panzerino, and I'm your host for this episode. At Vacuum Labs, we're a solution-based tech powerhouse, and we believe that the future is in communities when it comes to digital transformation and financial services. If you're interested in hearing more about fintech, digital banking, or payments, please don't hesitate to subscribe or to attend one of our virtual events. As ever, I'm not alone on this podcast, and on this episode, I am delighted to say that I have two co-hosts or guests with me. I'm joined by Michael Callis, who's the Chief Strategy Officer at Vacuum Labs and leading the charge in the United States, and Anthony Strike, who's the founder of SteadiPay, who's based in the United States. We have a bit of a flavor, as you can hear, to this episode. We're taking it home. So that we can spend more time talking about some of the amazing things that we're doing in the United States. Michael, I'm going to ask you if you'll start off our podcast today and introduce Anthony and get us rolling.
You got it, boss. Great to be with you, Ellen. I'm an avid subscriber, of course, and love the work you're doing with us. So Anthony and I are friends. We met a few years back now in LA at a party for Greek entrepreneurs, right, Anthony?
That is right.
And I think that after the 14th or 15th bottle of wine was opened, you and I went off to a corner and we were debating the pros and cons of banking as a service in the US and how much needs to be accomplished there.
We were the only two fintech people, I think, there that night. It was definitely an interesting scene and a lot of fun.
You're so right. And I remember back almost a decade when I first met Ellen Panzerino. Remember, Ellen? In our early 20s. And we had an amazing conversation about my grandmother's credit union in Brownsville, Texas. Remember, I told you the story, right? That I remember going to the bank as a kid. And my grandmother was a teacher for 37 years in Brownsville. And she went to the Brownsville Teachers Credit Union. And the same woman had been her banker her entire career, Gloria Villegas. And I think that what the small bank, what that credit union kind of energy can bring to an entrepreneur looking to scale is a reminder of why we do what we do, why we serve our communities. And in the age of digital, our communities are everywhere. So therefore, it's even more imperative to stay focused on that customer centricity. And that's really exciting. And actually, Anthony, that leads me to asking you to tell us a little bit about SteadiPay and your journey.
Our journey has been a winding one. SteadiPay started as a personal finance app. It was born out of my wife and I just sucking at budgeting and wondering every month what the hell we spent all this money on credit cards. And in fact, my wife made the comment to me one month. She said, "It's just so easy to swipe the card and worry about paying it off later. I wish the money came out of our account right away." And I thought, yeah, but you could just use the debit card, being a good husband and just, of course, finding a solution immediately. And she said, no, you wouldn't get the rewards. We went to London for free on the miles last year. And I'd like to get the rewards, but not have to worry about tracking how much I'm spending and worrying about some big payment at the end of the month surprising us. We were reasonable users of our card. We paid our bill off in full every month, but it just felt like this thing was sneak attacking us each month. That solution didn't exist in the market that I was aware of, and I decided to go build it. So we built this tool that lets you, as you spent money on your card, we pulled funds aside and paid it down for you and made sure you didn't overspend, but still earned your rewards. That was a nice little product, but two things happened simultaneously. Number one, we got to a few thousand users and we started hearing from a number of our customers who were small business owners, asking if they could use the card on their small business finances. And this was really curious to us. It didn't jive with the initial reason that we had built up the product. We thought, why would a business want to pay sooner? Seems like they'd want to pay later. But the truth was that managing cash and the timing of cash and your card limit and all this were these complex, annoying things that small business owners didn't want to have to manually manage. And it was our first little clue into just how many manual processes and legacy technologies and friction points a small business owner has to deal with in just managing finances. Cash flow is the lifeblood of a small business, and understanding how many dollars are moving in and out of your business is the most important thing you need to do as a small business owner. But it's also not remotely why you got into business, and it's also a big manual chore. So it has this challenge of this cash flow management has this challenge of being so critical, but so far away from what the business owner wants to do, and also being so much work. And that became a real obvious opportunity for us to take the technology we'd built and pivot it over to support small businesses. The second thing that happened was we started to really get firsthand understanding of just how freaking expensive it is to scale a B2C finance app. Good unit economics. So we really had no qualms in jumping ship on that growth route and have not looked back since starting to focus on this new direction. It's been a very wise company saving pivot.
It's marvelous.
Could you mind if I ask a question at this point on two of those points?
It's your show, Ellen.
It's my show. And listening to you, Anthony, I'm thinking about how many. I'm always working with the fintechs, whether that was on a program before or helping them raise finance. And every conversation where you'd say, listen, B2C is going to be really tough. So that 400 million or that much money you're going to have to get in there to build up the community and get things going. Think hard about it, particularly now where early stage funding becomes more difficult and later stage financing in this current uncertain situation is a bit easier. And secondly, that B2B solution, there's something in a founder's mind that makes it harder to do the pivot because you're passionate about the group that you set out to work with in the first place. Right. In this case, it was you and your wife. You know what I mean? You said you realized that it was a lot easier to scale it, but there must have been one of these moments where you're like, we're not raising finance or we're going to struggle before we get anywhere to break even, before you even start talking to a bank about licensing or anything else.
Yes. So the pivot to move to small businesses, I'm not sure we were convinced it would be easier to scale, but we probably thought it might at least be more cash efficient. There's a lot of other challenges involved in small businesses. And in fact, the financial tools targeted at SMBs, especially the smaller side of SMBs, that's a pretty new space evolving. In the past, most of the fintech tools that have hit the market, with a few notable exceptions like Bill.com, have really been pushed to the extremes because of business model temptation. When you look at consumer, it's the margins suck and it's hard. The pure scale of it is appealing. And so rather than go chase a few million small businesses, you can go chase tens of millions of consumers. And small businesses, to be frank, it's not much easier to acquire them than it is retail customers, and they don't churn much less. You get, in some way of looking at it, the worst of both worlds. You get the worst of consumer with the complexity of a business sale. So a lot of businesses say, I'm just going to focus on consumer. Plus, you have a lot of founders coming at it from their own personal pain points, like I was, who can instinctually jump into a consumer solution. On the other side, it's just a lot more appealing to go chase a big enterprise customer, where if you land one deal, that can get you your funding round. And if you land three more, that can land you the next funding round, and a few more, and you can be profitable. Now, landing those deals is, of course, can be insanely hard, but that just means that a lot of businesses looked at SMB and said, wow, it's got the hard sales cycles of potentially SMB and annoying churn problems and acquisition issues that you face in retail. So why would we spend time here? But the truth is that some of the technology advancements that have happened recently, some of the go-to-market strategies that have emerged have made it so that targeting SMBs is, I think, a really good business. And you let one group get far enough behind in technology solutions, and eventually the demand is going to make it worthwhile to solve this problem. All that has played a role in making SMB a much more interesting space to play right now, but still hard.
It's a space that's very dear to my heart. I mean, my own personal journey in helping just over 20,000 companies raise finance in the last 20 odd years means to me that they're very precious to me, which is the other reason that I like the smaller banks, because I think this is their moment with them as well. And having had 4 of my own companies and done a couple of exits, I feel the other side of it also. I wanted to ask you, we can talk about the pandemic bringing SMBs to the fore, because the community banks were able to get a lot of the money from the stimulus packages into the accounts of the SMBs. Right. Probably 9 billion. The first 9 billion came out of the Midwest into SMB accounts in the first lockdown that we had. So again, do you feel like this is a moment for these banks to be able to engage much more genuinely and on a longer term basis with this community in the way you've experienced working with them?
I would really love to say yes, but frankly, the COVID related stimulus packages are probably a one-time blip that won't meaningfully change banking relationships between small businesses and banks. I think most small businesses got money from banks where they already had a relationship, or if they did get it through a channel or a bank that they weren't already having a relationship, I don't think that was enough to make them fully switch their accounts. I think it might help a few banks here and there gain some customers, but I don't think it's a sustainable change or shift in those relationships, which is too bad, because community banks really went to bat for small businesses in this case. But ultimately, I don't think it's going to be a meaningful shift.
It's interesting. And one of the reasons I think that one of the outcomes, let's say, or one of the things that was highlighted, a weakness that was highlighted, was the clunkiness of engaging with a smaller bank on the UX side, but then in other areas. Now, you as a founder made the decision to work with another fintech, for example, with us in building out as you were going to scale. And we see a resistance, or we have seen a resistance in some of the smaller financial institutions and or the credit unions to take that leap of faith, to make that step, to work fintech to fintech. So I'm curious to see from your perspective, at what point did you realize that you had to get some outside help or that it would be a good idea? And how did you have the conversation with yourself that said, it's okay to let go and to get some external assistance as I scale?
We were under no delusions at any point that we were going to be able to handle this all on our own without getting too wonky on particular banking as a service platforms and what all that is. When we were at NBKC, we were facing a choice about a new product launch that we had to go through. And particularly, we wanted to launch a high yield bank agnostic sweep account for small businesses. We wanted to be able to let small businesses put any cash they had on hand to use, even for a short amount of time, even for a small amount of dollars, and get the best rate on the market without having to switch banks, without having to navigate a bunch of tech. We made a really simple bank agnostic sweep account, but we needed a bank partner that we could sweep those funds to who would give us a high yield rate. And we learned firsthand about the challenge of the banking as a service space, which is that if you or me as a fintech, if I'm dependent on a company like Synapse for my banking as a service platforms and my banking relationships, then I can only innovate to the extent that they innovate. I can only bring products to market that they have capabilities for. And that's why I think you see a ton of the neobanks be relatively undifferentiated on product, is because it's very hard to create something when all of them have some banking as a service platform operating underneath with relatively few exceptions. So we couldn't get a banking as a service provider to give us a rate that would be meaningfully differentiated. So we started to look for a new bank partner on this front. And this is a story that speaks to your point about community banks being a little unwilling to work directly with fintechs. We talked to tons of banks and we got so close with so many of them, but they just couldn't pull the trigger on saying, oh, you know what, we feel comfortable engaging with you directly rather than having some banking as a service provider handle all the ledgering and KYC and all that stuff that we feel comfortable with, notch a file generation, all those annoying things. Right around the same time, we discovered move.io, which is an open source notch resource that Wade and team have been building for a while. And at the time, it was relatively unknown, but someone we met through NBKC actually introduced us to it. And that gave us a tool to start managing Notcha files and ACH generation ourselves if we could find a bank partner that would partner directly with us. So we'd solved one portion of the banking as a service problem, but now we just needed a bank that was willing to do it. And this is where the other side of it comes in. Sometimes it's better to be lucky than good. My co-founder, Chad, who is a wonderful guy, has a good relationship because his kids play with the kids of the head of treasury at Axos Bank. So we were able to go to Axos Bank and have a conversation with someone that it would have taken us a long, long time to have a conversation with without that relationship. And as a result of that, we were able to get Axos to sign on to support this product. And so through Move, we were able to create our own essentially internal banking as a service platform to manage ledgers, manage Notcha file generation, do all of our KYC. We partnered with Alloy on that front. We partnered with VGS to manage a lot of the security stuff. And we pieced together these different vendors that could produce our own solution here. But that's a heavy lift, especially on the ledger side, especially understanding the critical nature of all this data. That is a really heavy lift. For as much as time as we've spent in this industry, we did not feel like we had the ability to just tell any old developer how to do this. It was right around that time that we were talking with Michael and Mate about your guys' capabilities, your experience in the fintech space, your knowledge of your experience having specifically built out ledger management software. It was really a fit that hit at the right time and was just a great fit where we said, okay, we found a partner that has expertise in building these really critical heavy lift things that we need to build right now. Yeah. So anyway, that's a long way of saying we did not feel like we could build this, but we knew we had to. And without making this too salesy and pitchy and advertising, Vacuum Labs was like a hand in a glove or glove on a hand for us when it came to delivering on that.
Checks in the mail, Anthony. Thank you.
Thank you.
I think I remember exactly the meeting that we had May 2020.
Yeah, we were sitting in, what was it, Yardbird across the street, across the way from that place in Venetian where everybody walks in and out.
It was insanity. And I remember, I think it was the Mexican joint. I forget which one it was. But I remember we had the nachos and basically Mate and I just ate while you drew out what you needed. Yep. It was and we're like, yeah, we can do that. I think that you're a great match for us because you challenge us. we don't really know how to do stuff. We know how to do stuff that's quote unquote simple. But when our engineers can be challenged, then everybody's won. I think that that's why we stay very boutique, and that way we can focus on folks like you that have a vision that can't be delivered by the existing platforms out there.
Yeah.
Right.
Yeah. And that was our concern with most of the other shops we talked to, is that they were really going to be learning this almost behind the learning curve from us. And that was a little nerve wracking to sign a deal for that. And so the fact that you guys had some expertise in places that we didn't yet was great. I think I walked out of that meeting and went right over to Donald Hawkins, Griffin, and now he's got his own neobank going. But I walked over and you got to talk to these guys. And if I remember right, you guys ended up working together too, right?
A little bit. Yeah.
Okay, good.
We love Donald. I think his vision for banking his community is spectacular. And
yeah, they're doing a great job.
Yeah, they are. Anthony, I wonder if we could take a step back, because Ellen and I are both lovers of bank as a service. My relationship with bank as a service goes back to BBVA Bank in Spain, right? Like I feel like I've been rooting for this industry for a very long time, really in my late 20s. And I'm curious, do you think that a platform can be built for the US to actually service founders like you? Or is the mix of existing platforms and kind of a really good engineering team to kind of put all together the solution?
What I would love to see in market, and maybe if SteadiPay just totally craps out, I'll try to build this if it's not in the market yet. But I would love to see is, with you, of course. What I would love to see is a marketplace for different financial tools for a fintech to build. Right now, if you go to Synapse, you're locked in on Synapse. And if you go to Q2, you're locked in with Q2. And there's not a lot of kind of picking and choosing what you want. And I'll use an analogy. So like what Alloy is doing with KYC and KYB, they're bringing together a bunch of different vendors. They're applying some leverage at scale to get deals that make it at least cost neutral for new customers, and making the KYC, KYB a one-stop shop thing. I think there's going to be real opportunity for that with specific financial tools. And I think there's going to be enough community banks willing to provide these a la carte services that would pipe into a marketplace like this, that a fintech could be focused on just providing really good UX for its customers. And then on the back end, you could see 5, 6, 10, 15 different banks plugging into different elements of this. Now, there's friction here because no bank wants to just make itself dumb pipes, especially one single dumb pipe for one single product. But I don't know that they're going to have a choice, because there are enough small banks out there who are willing to lend their charter in order to stay alive and relevant and maintain access to customers, that you could probably piece together 10 community banks that would be willing to provide different financial services on an a la carte basis and allow a fintech to build a really more customized platform. And that's what we would have gone with. Move, I think, could be a huge facilitator of this. And they've just raised some crazy money from some great investors and are really going to be putting some cool stuff out there in the market with ledger management software and things like that they don't have out there yet. That's where I think the opportunity is.
Along that line, and I would agree with you, and I think that's probably not too far off in the future in the US. Do you feel the role of regulation and regulators? We're in a transition now, obviously. Brooks is not with the OCC anymore. Yelena McWilliams is only there until 2023, but we do have this now listing that the FDIC has put out. If you're on the list, then you can, if you're a smaller bank, you can be reasonably assured that you've passed a few tests, as it were, to engage. Will regulation like open banking, which is now seeping in everywhere else as well, have an impact on that concept that you just explained?
I'm sure it will. I frankly just would need to do a little more research on what the technological implications are of this sort of marketplace approach before I had a real intelligent answer for you there. I think open banking is, if it's going to look like it does in the US, like it does in Europe, it's going to be a long time before that happens. I think we're much more likely to see large banks getting their APIs polished up and owning this themselves, and some technology providers building on top of that. I can see alternatives to Plaid coming in that are more friendly to the banking APIs. I can see a lot of stuff happening that facilitates this. But from a regulatory perspective, I just think they're going to be playing catch up the whole way. So I really don't know.
I agree, Ellen. I think in Europe, obviously, we lived through the UK deciding to, make open banking standard, all these things, right? And even now, we're still waiting for banks to catch up, some of them, while some have been trailblazers, BEVA among them. I think that the thing I love about our homeland, kids, is that it's industry demanding this. And so it's capitalism at its best needs to catch up with these needs. And more to the point, I think the marketplace is dreadfully in need of innovative products. I think that we're going through the obvious Robin Hood moment that has been an absolute shock to watch. All this stuff happening. It honestly, it's what the hell? I'm on the board of Fels Group out of Germany, a similar platform, but completely regulated, BaFin certified, right? So playing by the rules there is just absolutely how it's built. I think about the underserved population of SMEs in the States. That is an important contingent. I think that we need to respond better. And that's certainly a big reason why we're focusing so much on the Americas at Vacuum Labs. I've always said I'm going to go home and do something special. And so COVID slowed that down a bit. We're going to be there. And Anthony, obviously we're investors in your company. We believe firmly in what you're doing. And your insights are really interesting because we're in a bubble in Europe and Asia. Asia's open banking. It's nuts. It's amazing, right? What we can do in Asia. The most important capitalist country in the world needs to catch up or begin to set the standards.
It's a good example of that capitalism can create its own problems, of course. A lot of the issues that are here are being driven by the fact that regulators didn't get involved earlier and let capitalism run its course. But we're here now, and this is where we are. I think as a fintech founder, trying to build things where I'm not beholden to some banking as a service provider that's going to limit me. I'm invested in seeing tools come to market that regulators view as giving flexibility and access rather than limiting those things. I think what I'm talking about as far as marketplace for financial tools and plugging into more APIs and broadening that is access friendly, and regulators would generally like that. But who knows? We'll see where it goes.
Transparent and accessible. I mean, those are the two sort of pieces that regulators love.
Yeah. And for us in America is that anything that helps small businesses, it has just immediate momentum behind it when it comes to government and regulatory stuff. I think as we can generate proof that this fintech stuff is meaningfully helping small businesses, that will really help our case. Now, a lot of small business financial tools are really nascent. And so that real proof is not there yet, but it's going to get there. And I think that will really support it.
It's a really good point as well, because sitting on this side where we've been doing this for a few years and with the advent of open banking in 2018, you almost ask yourself, is it a fad? How many SME banks, how many neobanks, how many challenger banks can you spin out for SMEs? Do you go very niche and become, I'm the supply chain bank for this SME fashion industry? Where do you draw the line in that way? And then as an owner, how do I distinguish as an SMB owner which way I'm going to go? And will that create too much choice, create paralysis? I always say this when I'm home. I go down the salad dressing aisle in the supermarket and I come out with oil and vinegar because I'm so confused. I just revert back to what I know. Mm-hmm. So there's a danger of having too much choice, having it become almost superficial and not without a voice of authenticity, which means an SMB owner won't move to that offering. So learn from the mistakes here.
I think there's a couple things that I'm going to try to talk through without making myself sound like an idiot. First of all, I think that the niche thing is a question of how many are venture backable. That's one separate question because I think not many. I think even the ones that have been venture backed are going to struggle to make the returns that they want to make. But however, I think there's, as the cost of starting a quote unquote neobank or a financial services company goes way, 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 way down. I mean, like exponentially lower than it was 10 years ago. It will become increasingly easier to build a niche financial services provider, whether you will call it a neobank or an embedded finance provider or something, but very niche. Maybe it only offers one or two basic services that a particular vertical needs. Look at the creator economy and influencers. Their banking needs are fairly limited and focused. It's in this weird blurry range between small business and individual. And there are a number of really cool companies, I hesitate to call them neobanks, but companies popping up that offer financial services in that exact space. I think that you could start to see a world where there are a lot of very niche financial services providers functioning as a sort of de facto bank for specific verticals that just offer exactly what that vertical needs. And then you'll inevitably see the great bundling. So we're in the unbundling phase here on financial services where things are getting nicheified, and then there will be some rebundling. But I think in the near term, the cost of creating financial services or embedding financial services is getting to the point where it's almost like, not like starting a website, but not that far off.
No, I think you're right. I think you're totally right. Like a lot of these niche banks, right? The marketing and the approach to the community is great, but I don't see what's under the hood that actually differentiates it. So if you're trying to go after underserved communities and your KYC provider can't basically get anybody approved for the platform, you're basically just doing nothing. You're getting people's hopes up, and they'll be right back buying the prepaid card at Walgreens, which defeats the entire purpose. I think that where the US needs to get a whole lot sharper is working with companies that understand how to solve those niche problems. And those are things happening around the world. If you just look to Thailand or Indonesia, how they're solving these, Bangladesh. And I think more of what's happening in the guts of these neobanks needs to be really understood properly and solved, because we can solve any problem with it, almost any problem with technology.
Yeah.
And I think that there's not enough focus here on understanding how data identification, how that actually works. If I can bank from zero, 38,000 people in Thailand, and they have a 4% non-payment rate, how can I not use those same tools to go after parts of the states that are underbanked, right? Or unbanked. So to me, I think we need to do a better job as an American sort of fintech family. Actually, no, families are dysfunctional teams that actually look at how the rest of the world are solving these problems, because they're not insurmountable. Whoever does that stuff first will actually win the neobank game. Not just trying to go after this easy to KYC folks with jobs. That's simple.
Yeah,
right?
We really don't need any more high net worth individual financial tools. That has been solved. The challenges of underserved communities are pretty widely discussed in the fintech space at this point, and I'm by no means an expert there, but I can talk about some of the customers we have that are small businesses who we have not had very many issues with validation of customers. There's a whole separate ballgame of these people don't even have banks and dealing with people who are in that group.
Yes.
But for us, and when we're talking about small businesses, it's a question of what are they currently using? What are the tools that they need? And what does quote unquote underbanked look like? An underbanked small business is someone who's just keeping a bunch of their cash in their Venmo account or their PayPal account
Yes.
or their Stripe account. And are those tools giving them the flexibility they need to grow their business? A lot of companies out there that we talk to are doing decent amounts of revenue, and it's just sitting there in those types of accounts. If all you're doing is letting someone deposit and withdraw cash, that's fine. But if you start talking about how do we lend to these companies? How should we give them merchant cash advances? Should it be term loans? What's the right solution in lending there? Now you get into these new questions of underwriting, and how can we underwrite in a way that doesn't put the individual at risk, but also keeps risk off the company's balance sheet? And that's where I think our industry has a lot of work to still do to solve the quote unquote underbanked part of SMBs. It's less about them not having a bank and more about them not having access to tools to really grow and improve their business from the places they do bank.
That's almost like a complete circle then, Anthony, to what we said earlier about the small bank approach. It brings us full circle because we're talking about how those smaller banks have that personal touch. And what you're basically trying to do is to extend that personal touch to a wider network of SMEs, where in the old days or 10, 15 years ago, you walk into your small bank and you have a conversation with the banker, with your hometown banker. And I think it's sort of like the best digital, right, is actually digital touching, is actually the closeness. And that's a fascinating bit. Team, that actually brings us full circle to the comment that I think Alen made earlier about sort of community banks and being that high touch, very personal connection with you and your business. Anthony, I think we've talked about this more than once.
Yeah, what a lot of community banks differentiate themselves on is that relationship they have with the business. They know the intricacies of the business. They know the family and community and dynamics and all of that. But ultimately what that's for is about making sure you have the right financial tools. That relationship is meant to deliver, okay, this kind of loan is better for you than that kind of loan. And so we're trying to find is the chance to tell a small business, here's what your cash looks like. Here's what's going to happen in the future. Really understand that. And then have the type of insight that community bank could have to point you toward the right financial solutions. We did more than 300 customer interviews and talked to more than 100 accountants who support small businesses. And as we were researching how to make this product work. And one of the things we came away with really clearly understanding was that it's not enough to just give the small business a forecast or data. There are a lot of forecasting tools in the market. There's a lot of FP&A tools. There's a lot of things that help a customer see their data. But that should be the starting point for the small business, where you understand their current cash situation and data or financial needs, and you don't just dump a forecast on them and say, okay, here's your data, go figure out what you need to do. They need help, like the community banker would do in the past, understanding what the right things to do are. And so what we're working on building out now in SteadiPay, we've put together the front end of that. Now we're working on the back end, which is identifying what buttons the small business can push, what levers they can pull financially to improve their cash situation and point them toward the right solutions to do that. And maybe we'll build those solutions in-house with you guys like we have with our treasury management tools. And maybe we'll partner with some of those in places where there's great solutions already in market. But we want to have a portion of that role of having deep insight into the business. Ours is based on data rather than an in-person relationship, but using that deep understanding to help you find the access to the right tools for your business.
Love it. Love it. So Anthony, thanks so much for that and spending some time with Elen and me in our Born in the USA version of Banking on Air. Anthony, wondering if you have any advice for a fintech founder starting today, 2021 in the US.
Oh, geez. I still very much feel like I know only the most superficial amount of stuff about the fintech world. And frankly, nobody should be really taking advice from me on how to start a fintech company yet. But if I did have to give some advice, I would say don't feel like you're stuck using the same tools and infrastructure that the companies who built themselves up over the last few years used. Doing that will leave you undifferentiated. Take some, not financial risk with your customers' money, but take some risk around your product architecture and try some new things that are coming onto the market. There's some awesome stuff. There's a bunch of companies, Phoenix and Unit and Bond are all doing cool new things. Move is obviously, we're big believers in Move. There's a lot of people to handle heavy lifts on other things like regulatory requirements and PCI compliance and KYC and KYB. So don't look to past success stories to help you figure out how to structure your product. Do the research to understand what's new in the market, because that's where I think you'll be able to differentiate. And the other thing I'd say is don't start a PFM.
For the love of all that is holy, PFM, 100%.
That's very good advice. So people, make sure you take that on board. It's been excellent advice throughout the whole of this conversation. I've thoroughly enjoyed having both of my guests on tonight. As we've taken our jaunt around the US and we've come back over to Europe and we've taken our experience back over, and we've all agreed that SMBs are vital to financial services, and we need to serve them better because they are going to help us come out of our current situation and turn the corner. During this episode, you heard Anthony mention Donald Hawkins, the co-founder of Boulevard, which is a new African-American bank taking the US by storm. Donald was a previous guest on Banking on Air, so feel free to go back to an earlier episode and hear his side of the story. Thank you to Anthony Strike of SteadiPay and Michael Callis of Vacuum Labs, and to everyone for listening. See you on the next episode.
Thank you, Elen.
Thanks, guys.